What's going on, investors? My name is Emmanuel, and in this video I will show you the best 3 stocks that I bought this week, my reasons for buying them, how many shares I picked up, and what my average prices were. And spoiler alert, one of these stocks is now currently up over 40% in just 2 days, which is absolutely crazy. So you're going to have to stick around to find out which company that was. But if you've been following me on Instagram or on Twitter, then you already have a really good idea of what these companies were and also which one was up over 40%, because some of you guys got in on it as well. So if you don't follow me on Instagram or Twitter, the links to my socials are in the description below. But I hope you guys had a phenomenal week in the markets. And if you did end up buying shares this week, let me know in the comments below which stocks they were, how many shares you purchased, and if you didn't buy anything this week and you added some new positions to your watch list, go ahead and let me know. I love reading your recommendations. So with that said, right before we jump into the video, please make sure that you destroy that like button. It lets me know that you enjoy this type of content. And if you are new to the channel, then hit that subscribe button and the notification bell. But with all that said, let's jump into the video. So the first stock that I bought this week was Alibaba. The ticker symbol is BABA. Now, Alibaba has been on a delicious uptrend since the drop in March, soaring over 70% to its highs, which was back in October. But since then, it has pretty much fallen off a cliff, dropping over 20% in just a matter of weeks. That was due to the issues with Ant Group and Jack Ma's failed attempt with the IPO. But I don't think this affected Alibaba too much as a business. Yes, perhaps maybe the reputation with the government is now been fragmented as a result. But Alibaba as a business, I don't really see how this will affect their operations in the long term. Nor do I see their revenue slowing down anytime soon, especially with the run-up to Christmas. I just don't see how this is going to affect Alibaba as a business. I do think as well that if Joe Biden gets inaugurated in January, then I think he will have a much softer approach to US and China relations, definitely more than what Donald Trump did. So we'll see whether that actually turns out to be a good thing or a bad thing. That's if he gets inaugurated. But I do think overall that this sell-off was an overreaction in my opinion, and this created a massive opportunity to start buying in an incredible company that has been growing at crazy rates at a 20% discount. I mean, they have currently been growing their revenue year over year by 31%. Now, this is in the midst of the Roni. And the forwarded year-on-year revenue is expected to increase to 35%, especially if the vaccines start to roll out and we return to some level of normalcy. I think this is achievable. The year-on-year EBITDA as well is sitting at double digits with positive operating and free cash flows as well. Their net income did drop 3 years ago in 2017, and that was due to a drop in net interest on expenses. But it's since picked back up, and their net incomes has been back on track, headed in only one direction, which is up. Now, looking at Alibaba from a balance sheet perspective, their cash position has only been getting stronger year after year. And also their stockholder equity has also been increasing year over year. So this indicates to me their assets are growing much faster than their liabilities, which as an investor is very good to see. So I couldn't be happier with my investment. I now own a total of 15 shares of Alibaba, and my cost price was $266.60. And I think by March, looking at possibly April, I suspect we will see Alibaba trading back in the $300 per share price range. So that was my first purchase this week. The second stock that I bought more shares of is Medical Properties Trust. Ticker symbol is MPW. I mean, I absolutely love this company. I've spoken about them before in my channel, in my live stream. They are a REIT that boasts one of the largest hospital portfolios in the US, with over 385 properties with a combined 42,000 beds. And these properties are leased to 46 individual operators across 33 US states, and also they've expanded. They're now operating in 9 countries, including right here in the UK. Now, the reason why I got interested in them again is because they completely smashed. They blew out their recent earnings, and they also collected a whopping 98% of their contractual rent from their tenants. Now, when you compare this to another REIT, which is realty income, for example, they only managed to collect 93% of their contractual rent. Now, granted, they both have different types of tenants, but it just shows you the strength of Medical Properties Trust's tenants, again, being hospitals, of course. Now, there was something that the CEO said in his briefing in the conference call that really won my heart, and that actually made me decide to actually load up on even more shares. He said this. He said, hospitals are the center point of the healthcare delivery system all over the world, and civilization will do whatever they have to do to ensure that their populations have access to hospitals. And that's a fact. This type of business is Rona proof. In fact, the Roni has actually created even more opportunities for Medical Properties Trust, because some of the smaller hospitals, the private hospitals, especially those ones that own their own real estate, are starting to really struggle. And in some cases, they're actually now starting to run out of cash. And some of these smaller privatized hospitals are now considering monetizing the real estate just to get some capital to be able to stay afloat. And guess who stands ready to provide these hospitals with the capital to buy the real estate? Medical Properties Trust. I mean, there's levels to this game. So the Rona has actually been instrumental for MPW to be able to expand their portfolios and also get some discounts, which is absolutely incredible. Did I mention that they also grew their revenue by 50% year over year? Yes, this is a dividend stock, not a growth stock, but yet the revenue grew over 50% with a forwarded revenue growth of over 20%, which is absolutely insane. It's almost unheard of within REITs. Plus, they also pay a dividend yield of 5%, which, if you are serious about dividend investing, there's absolutely no way you can't have this company in your dividend portfolio. They are a phenomenal, growing, dividend-paying company. The ratings all across the board is bullish amongst analysts. I am bullish on this company, and that's why I decided to pick up an extra 50 more shares this week. And I even averaged up, and I didn't mind averaging up for this company. So currently, I now own over 250 shares of Medical Properties Trust with an average price of $18 and some change. Now, the third stock that I bought this week is the big one. This stock went on an absolute tear this week. It was off the back of a recent partnership agreement with Apple Inc. And you guys probably already know which company I'm talking about. I did do a video on them this week. It's ChargePoint. Ticker symbol is SBE, and they are expected to merge with SwitchBack Energy acquisition. Now, I did do an in-depth analysis of ChargePoint, which I will link the video in the description below, so please check it out if you haven't already. But from that video, I did receive a ton of follow-up questions regarding ChargePoint on my social medias. Some of the questions were really interesting, like, when will the merger take place? Is it possible that the merger is actually unsuccessful? Which is a very important question and has happened before. Another question I received was, what will the new name be? What will the new name of the company be after the merger? Is it too late to buy at these prices? And many more. So what I've decided to do, I've compiled the top 5 questions I received regarding ChargePoint, and I have answered them all in a video that I plan to release before market open on Monday. So if you don't want to miss that video, make sure you are subscribed. But a quick summary of ChargePoint in case you missed the video. They are one of the largest manufacturers and distributors of electric vehicle charging stations, and they currently boast over 118,000 charging networks across North America. They have delivered more places to charge than any other company, and they actually claim this, that someone plugs into a ChargePoint network every 2 seconds. Multiple established partnerships with blue chip companies, such as their most recent partnership with Apple. Also, they have pre-existing partnerships with the likes of Shell. You've got Exxon, Ford, Volkswagen, many more. So I'm super bullish on this company, but I haven't gone too heavy on this company quite yet because I am waiting for the merger to go ahead. But I initially started off my position with 75 shares on Monday, and I picked up a further 75 shares on Tuesday, right as the news of the Apple partnership was announced, bringing my total to 150 shares with a cost price of $18 and some change. So the question is, did you buy any shares this week? And if you did, let me know in the comment section below and how many shares you did end up picking up. But with all that said, Please make sure that you do your own due diligence before you do decide to invest in any stock or in any company. Remember, I am not a financial advisor, so please view my content as purely educational. And if you do want to learn about investing in stocks, there are some useful links in the description below, including some books that I highly recommend. Plus, I also recommend The Intelligent Investor by Benjamin Graham. Quality book. But don't forget to destroy that like button, hit the subscribe button and the notification bell if you want to see more content from me. Thank you so much for watching. I appreciate your time, and I'll see you tomorrow before market open. Take care, guys. Peace.